S&P 500 and NASDAQ indexes close at record highs, recovering all the ground they lost in the nosedive late last year. Opinion behind the great GDP numbers: the real economy is slumping. The real economy, private sector consumption and investment slowed sharply in the first quarter to 1.3% annual rate, the slowest in nearly 6 years. The California economy isn't just a U.S. powerhouse.
This hasn't even begun to unfold in terms of the tragedy of the economy here in the U.S. because it's all about prices. The price of gas and food in America, and particularly the price of gas, will triple from its current level. And this is what people have to understand. This is going to happen regardless of what Obama does or John Boehner does. The global currency grid, the fiat money system is collapsing. This is what gold and silver are telling us. And gas has been artificially cheap for decades through subsidies coming out of government, through the banking system, as well as all these wars of convenience that the U.S. wages in Iraq and Afghanistan. This is all just murder for hire by the oil industry to keep the price of gas down, to keep the man on the street calm and subdued. But the lid's coming off the kettle, and now the gas prices are going to be $6, $7, $8, $9, $10 a gallon, like it is in Europe. And then we'll start to see some real action. But that's baked into the cake, as I said before. There's nothing that anyone can do is going to stop this, because the post-World War II era of adding debt to finance growth climaxed in 2007. No amount of debt can stimulate any growth to pay this debt, because the economy has reached debt saturation. No amount of additional debt. And this is all the plan that Obama and Boehner are putting forward, is to restructure the debt or add to the debt. That's not going to create enough growth to pay down the debt. Therefore, ipso facto, as night follows day, this downward spiral of U.S. bonds, U.S. credit rating, and the U.S. economy is not going to be interrupted by anyone or any policy. Well, the rating on U.S. debt is definitely going to be downgraded, and this is already happening on the periphery. Rating agencies in other places around the world are flashing that they're going to be downgrading American debt. So that is baked into the cake. But what's interesting here is that for 10 years, really since post 9/11, we've had a war of savers versus speculators. The speculators have been winning. The speculators have been able to borrow money at near 0%. The savers have been the big losers. There are a lot of people who are in the savers camp who want to see the U.S. default, because this would mean that the bond market would crash, but the yield on their savings would go up. Same thing for gold, which is where a lot of people have run now in this war. And gold prices have been telegraphing this catastrophe for 10 years. Gold prices continue to hit new all-time highs, and the people who own gold are really loving this, because they're going to see price of gold continue to skyrocket. Well, Washington is a peripheral player now. We see this all over the world, whether it's IMF is now pulling the strings in Europe. They're also pulling the strings in Washington. Christine Lagarde, as a matter of fact, said, who's the new chief of the IMF, that the extraordinary privilege the extravagant privilege of the U.S. dollar that's been enjoyed since World War II is now at risk as the U.S. dollar loses its world reserve currency. So the world is adjusting. The dollar will lose its status as world reserve currency. The U.S. debt will lose the AAA rating, and it's a complete different configuration. And Washington is not the biggest player in this. The global bankers are the biggest players, the global hedge fund managers, and that's where the action, that's who's determining the outcome of this, not the players in Washington. They have already ceded control to the global banking industry. Well, Lloyd Blankfein at Goldman Sachs, Jamie Dimon at JP Morgan, these are what I call 9/11 crybabies. They refuse to compete in this world. They want interest rates to be near zero. With a functioning U.S. economy, would mean interest rates are higher, which would destroy the speculators, but put money into the pockets of working class people. But the Jamie Dimons and the Lloyd Blankfeins and Wall Street in total, they're, as I call it, they're 9/11 crybabies. They live on the teat of the subsidy that's given to them from the Federal Reserve and the Treasury. It's all about ensuring their bonuses and ensuring their salaries. They need to grow up. It's no longer, you can't go to Washington anymore with a cup in hand and cry that, oh, I got hurt on 9/11, I need more free money. You can't do that anymore. You're going to have to compete in the globe now. Put your big boy pants on and compete in the globe. Stop crying, victimhood. Be an adult in all this. Blankfein and Diamond, they're the most overrated bankers in the history of the world. They do nothing but suck corporate welfare and banking welfare from Washington, and they're adding nothing to the productivity of the U.S. economy, and they're a disgrace, and it's really humiliating to have to witness this, but this is part of the process, I suppose, that America has to go through to get to the next level of global competitiveness, because right now America's lost its competitiveness because of these bankers who have destroyed the economy for a few extra bucks. Well, the way you get out of this mess is you need to accept the fact that the dollar is in a bubble and needs to be marked down by 50 or 60%. You need to take the hit, similar to what Iceland did. They said, look, we're not going to spend the rest of our time in the indentured servitude position from these bankers. We need to take the hit and let the krona collapse. The U.S., if they were being managed by somebody who knew something about economics and not Barack Obama, who's financially illiterate, they would allow the dollar to collapse against other currencies, let the economy go through 2 or 3 years of a gut-wrenching depression, and then come out of it and rebuild, and keep their sovereignty intact. To keep your sovereignty. Otherwise, America will end up like Greece, losing their sovereignty. America will end up like other countries in the Eurozone, like Ireland, that's lost its sovereignty to the IMF and these other banking institutions. I think most Americans would prefer to be sovereign and free than to be a vassal state of international bankers. The Tea Party is financed through the Koch brothers, and their allegiance is to the oil industry. And as prices of oil goes up, the Koch brothers make money, and the Tea Party are out on the street unemployed. Only in America do you find a population who's willing to go out into the street and fight for oligarchs and to fight for monopolists. This is unique to America, because everyone in America thinks they're only one lottery ticket away from being a billionaire. They don't seem to comprehend the fact that maybe as a joint effort, in a civil society, they have rights that they can lobby for and push back against these speculators and these borrowers. And this is what is, in my opinion, as I've said at the top of this of the segment, is that the savers are going to win this battle as the bond market crashes. So all the 9/11 crybabies on Wall Street are going to get punched in the face like they should have gotten 5 years ago, like Obama should have done when he took office in 2008, kick out Geithner, kick out Larry Summers, kick out Ben Bernanke, should have punched all those guys in the face, thrown them to the curb, bring in real responsible people like a Paul Volcker, for example. But instead he decided to just keep the status quo going and to line the pockets of these bankers who now put a gun to his head, and they've basically embarrassed him. They want the election. They want to recall the election. It's like they're recalling the presidential election by making Barack Obama appear as weak and ineffectual and financially illiterate as he now does. It's totally destroyed his career, but it's good for these bankers.